Most people have not heard of this company, Natus Medical. It has a diverse range of businesses in medical devices, software, and services. You've been a shareholder for 5 years. Why the nuclear option now?
Well, I wouldn't call it nuclear, at least not at this point.
Ousting the chairman is a pretty serious undertaking.
It is, and not something we do lightly. You're right. We first invested in the company in the summer of 2013. A little known part of the story is actually when we were first introduced to the company, there were a lot of upset shareholders back then. And the company was in a similar situation that it's in right now.
Well, they've been awfully patient, haven't they?
Well, when we took a look at the company, we concluded back then that the company had a lot of things it could do to right itself, including integrating past acquisitions, putting the kibosh on further M&A, and trying to grow the business organically.
You've been highly critical of what's happened since 2015. You have a public letter out this morning. It looks to me, Dan, like you have a tough fight on your hands for 3 reasons. One, it's a staggered board, so through the election process, you can only get rid of 2 of the 6 directors in any 1 year. 2, as we mentioned, you're trying to oust the chairman, not such an easy thing to do. And third, as is the case for so many stocks now, a good chunk of the ownership is either passive or algo, meaning that corporate governance may not be exercised. Let's talk about that. BlackRock has about 9% of this stock in ETFs. Vanguard has about 7% of the stock. Dimensional's in the stock. State Street is in the stock. With almost 25% in passive or algo, how do you get enough shareholders on board?
Well, one of the things about the institutions that you just mentioned, they are all very, very adept at rendering decisions in proxy contests. They all have dedicated groups internally that are run by very accomplished people, some of whom have many, many years in the governance community. And when you get to the point where you've nominated directors, they schedule time. You go in, you take your nominees, you introduce them to the people that you're advocating putting on the board. They educate themselves and they make a determination. And I will say, having been in front of all of them in the past, we know how they think, and I've seen them make very, very good decisions.
So regardless of what decision they make, you're confident that a firm like BlackRock and Michelle Adkins, who runs that department for BlackRock, will give you enough bandwidth when BlackRock has to render such opinions on tens of thousands of securities?
I'm 100% confident because every single time we've been in this situation, they've had us in and given us a live meeting to hear what our concerns were. Every single company we've done this before, Erik.
How successful, Dan, typically are efforts to oust the chairman of a board?
Well, it happens from time to time, and I will say to you that, again, it's not something we do lightly. I'm the chairman of a publicly traded company in our portfolio called Cutera. And I will say from my vantage point there, I view my overriding responsibility as representing the interests of the independent stockholders of the company. Every decision that we make, I view my role as speaking up for them. And what I have seen from my engagement with this company is I don't think that is the way that the chairman has been acting based on our engagement and what we've seen. I think that...
Be more direct. In your view, how bad a chairman of the board is the gentleman, Robert Gunst?
I'll answer it this way. Being the independent chairman means first and foremost, you've got to be available to talk with stockholders. You've got to be willing to meet with them, and I've met with stockholders in my role as chairman of this other company. And that includes if they have something challenging to say, although fortunately in that case, the stock has appreciated 6-fold since we went on the board 3 years ago. So we haven't had a whole lot of people that were upset with us. But you've got to be available. You've got to be willing to meet and hear them out. The second thing is you've got to be willing to do that without hiding behind management. And every time we tried to engage, what we got back was direction to talk with management or to include management in the meetings with the board and chairman.
That's not happening here. If you get your way, 3 new directors on the board, you'll have half the board. What you haven't said thus far, and what I'd like to know, is with that power, provided you have it, what are you going to do? What would you advocate for? The letter isn't clear. Do you want divestitures? Do you want a sale of the company? Is it just operational execution improvement? What is it?
Great question. First of all, when you talk about power, remember, I'm not going on the board. We've nominated 3 independent directors, Mark Gilreath, Josh Levine, Lisa Heine. They are not investors in Voce's funds. They're not being paid by Voce. We have no financial ties to them. We chose them because of their independence, because of their experience. We expect them to go and call
But you're
them
still
like
going to
they
be
see them.
vocal. What are you going to be asking them to do?
Well, it shouldn't come as a surprise to anybody that's read our letter. First and foremost, stop all the acquisitions.
Yes.
No more M&A. It hasn't worked for this company.
You want them to fire the chairman, the CEO, excuse me?
That's up to the board. I think
Well, you're highly critical of the CEO.
the new board will have to decide, once they get there, what the company's strategy is going to be, and then who the right people are to undertake the strategy.
Okay, so at the very least, no more acquisitions. If that happens, even if that's all that happens, and the stock should, right, if you're right, revalue, what should it revalue at?
I don't have a prediction as to future stock prices.
You do, of course you do. You've modeled this out. You wouldn't be in the stock, you wouldn't be waging a proxy contest if you didn't have a plan.
We think there's a lot of upside if they also take a look at the expense structure. The expenses, in our opinion, are too high. They've talked about actually increasing them and embarking on a period of trying to invest in all sorts of new markets and products, which is, by the way, not in the DNA of the current leadership. And so those expense savings would boost the earnings of the company and also hopefully lead to a higher stock price.
What do you think it's worth? Give me a number.
I don't have a number for you, Eric. Sorry to disappoint you.
Dan, let me ask you this. Donald Trump, the president, has reintroduced, let's say, maybe not single-handedly, but certainly in part, volatility to the stock market. Is that a good thing for activists like yourself?
Well, I think volatility can be fine if you know how to take advantage of it. And so when we have stocks where we don't think anything fundamental has changed and the value of the stock goes down, we buy more of it. I know some people sell stocks when they go down. That's not the way I'm wired. And so we view that as an opportunity to increase the size of our positions. At least from a technical standpoint, I don't have a problem with volatility. I do have a problem with policies and statements coming out of any government official that are ill-considered or inconsistent, that lead the markets to be confused about which direction government policy is heading. And frankly, and we've talked about this before in our previous chats, some of the things that the administration has done, I think, have been very market-friendly, very economy-friendly. And some of the things that we're talking about now, like trade wars and anti-immigration stances, to me are anathema to well-functioning capital markets.